I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Nathan McDonald, the CEO of Keiretsu Capital. Nathan, welcome to the show. It's a pleasure to have you here today.
Yeah, thanks, Ashton. Great to be with you guys.
You're very welcome. If you could kick off the interview by giving a little bit of background on yourself in the investment world and how that translates into the Keiretsu Forum Angel Group.
Yeah, so I've had a fun career the last 20 years in angel investing. Got involved with it in college, actually doing research on the formation of formal, informal angel groups back in the dot-com craze, 1998, 99, 2000. Graduated from UW in 99 and went to work attending events and networking. And it's been a fascinating arc of my career and being able to research and look at, what's happening with the private investment markets and where angel investing has come over the last 20 years as it's emerged from very much literally investing out of somebody's trunk in the back of their car to now all the different sophisticated ways folks can access deal flow and collaborate on opportunities. So it's been a lot of fun to see the communities grow and be able to connect together and network through events. And now with our current situation, things have really taken a step into the online community where what has traditionally been an offline activity for the most part is now 100% online. So we're interested to see how that impact affects things coming out the other end and hopefully gives more people an opportunity to participate no matter where they are geographically and, then based on their areas of interest. So it's a fascinating time we're in now. We've been through a couple ups and down cycles along the way. And so we certainly have learned a thing or two. So happy to share some of the things that we've seen work in these situations we've been through before.
Great. Thank you, Nathan. And we're definitely moving up and down in these different times. And it seems a lot of these private companies have needed to make a quick pivot based on the COVID situation that's going on, especially ones that are in entertainment or in close interaction. But just to touch a little bit more on the background of Keiretsu Forum, your company and your group has been around for quite a long time. And with the Keiretsu Forum, I believe they've won awards for 3 years in a row, being one of the number one most active VC group. Could you explain a little bit about that and how Keiretsu has maintained being number one?
Yeah, it's funny. When we began tracking our investment data back in 2005, it was a little bit of a novelty because nobody really tracked private angel investment information and deals. Everything was focused on the money tree and the VC investing. And it really had been like that up until about 5 years ago. We were finally able to get PitchBook to track the angel data together with the Angel Capital Association, the Halo report. Some of the researchers from the University of Washington and from Willamette University had done some research studies. And so they began to see angel investment groups along the same lines as venture capital investors in terms of their activity level and backing companies. There became a lot more interest in the data itself having some value. So companies began to track it, and groups like Keiretsu began to report our numbers and have them actually represented in the same investment totals that there are for Sequoia and for NEA and for Y Combinator and the other groups. So Keiretsu is a global network, 50 plus chapters, 3,000 members, about 20 years old now. We've always been one of the most active venture investment groups, but just now that they've been tracking the data the last 5 years, we've been the most active venture investor globally for the last three, coming close to a couple hundred deals a year. So it's almost an investment a little more than every other day. It's pretty amazing to see the activity level our members have and backing all kinds of different opportunities, both in North America and then also in Spain. We've been the most active venture group in Spain for a long time, and also in India. Our new chapters there have been growing very strong, and the angel market there is robust. So we're excited for the opportunity to really have a little more of a global expansion. It hasn't been something angel investing has traditionally done cross border. So there's certainly still a lot of room to grow, improve, and to create more efficiencies. And Keiretsu is fortunate to have done a lot of research, been on the front end of it, with due diligence, with screening, with syndication, supporting our companies throughout the life cycle of investment, and even 5 years ago launching Keiretsu Capital as a further extension of that. So it's been fun. We've learned a lot, but still a long way to go.
Definitely, and that's a great backstory. And I foresee a great opportunity for Keiretsu investors to see deals that they maybe would have missed because of this situation, and now everyone is streaming their pitches worldwide throughout the forum. Although it's internally, investors that traditionally are in the Northwest may be able to see something in Europe or in India that they wouldn't have caught, and it gives them even more opportunity.
Mm-hmm. Yeah, that's the idea, but the practicality of that is fairly limited. We've had good success syndicating our North American deals to India, to other places, receiving some level of investment. But still, for U.S. investors to invest internationally, if they haven't done it before, it's a whole nother level of complexity.
Mm-hmm.
It makes it a challenge. Even if you like the deal, even if it's a small investment, it is a bit of an extra jump to get comfortable with that type of thing. Entrepreneurship always has a lot of risk, and you add in that geographic or cultural risk, and just trying to understand even the investment documents can be substantially different than what you're used to looking in a different language. So still some room to grow in that, but it is always fascinating to see just the entrepreneurial idea. One of our groups in Toronto, they put together kind of a quick pitch highlight reel of some of the global opportunities that are presenting, some of the things they think are just pretty intriguing, just from what the technology does and how it might work kind of boy.
Mm-hmm.
And those are always fun to see the different ideas people are coming up with from around the world, and how we might be able to bring those to work here in our local markets.
Definitely. And you mentioned that Keiretsu is investing in almost over 100 different deals per year. What does that look like in terms of which industries has Keiretsu more traditionally focused on? And are you seeing a lot of investment going towards? And are you seeing a pivot because of this COVID situation in the types of investments that you may be more prone to investing to in the future?
Yeah, everything's changed a bit in the last few weeks, but historically we've been about half technology and half life sciences. In terms of our technology side of the equation, our private companies. And then we love real estate. So we've done brick and mortar since Randy Williams founded Keiretsu. He retired in real estate in the late 90s and actually founded Keiretsu to help him with his tech investing. And so getting a group of buddies together that had a lot of experience in investing in technology helped him be a better investor and avoid losing money. And so we continue to apply that technique in all these emerging markets, whether it's fintech, blockchain, clean tech, energy, a bit of consumer products, but they can be tough to defend. They can be tough to make money on. So we do like core IP-based opportunities that have intellectual property, have patents, have some kind of competitive advantage in the marketplace, and can be useful, and that angel investors can really get involved with and make a difference for. And obviously they need to be capital efficient. That's always been something for us. The VCs a little less so. They want as much capital into these opportunities as they can. That helps their economics more. But for angels investing our own money and family offices, we really appreciate the capital efficiency. And so nothing's changed there in terms of the market, because we're not looking to burn a bunch of cash and have to continually raise money all the time. We're looking to be very efficient, grow revenues. And it may take longer to exit, but ultimately the economics and the risks are worth it.
Mm-hmm. Great point. And with this uncertainty in the market in the past few weeks here, and there's been quite a volatility in the public markets, are you seeing a shift in the way that entrepreneurs are trying to raise capital? For example, coming to angel groups, do they have to change their strategy or just try and stay ahead of the curve now that the situation has gotten more dire and potentially could be worse?
Yeah, we've all been kind of in the aftermath of what's happened here and adjusting accordingly. And the entrepreneurs began to formulate, what are the responses to the questions? What are the questions even? It's hard when it's the fog is out there of what's happening in the media, and as things ripple around the world. Some communities are handling it very well. Here in Seattle, we're fortunate. We did remote work right out of the gates with the first case back at the end of February, early March, and then we've been distancing pretty much for a month now. And so we've not seen the spike that unfortunately they've seen in the East Coast and other more dense geographic areas. California locked down right away. And again, huge population area there in LA and San Francisco. So hopefully the West Coast holds up here, and we'll see what happens for the rest of the country. and we're all kind of in a wait and see mode on that. But each company's had to look at their business, their supply chain, their employees. Short term, take advantage of the government stimulus and the grant programs available, which I think this is the largest cash distribution to individuals and small businesses in the history of the planet. So this will be interesting to see what happens in the next couple of weeks. It took them 5 months after Katrina to get the money out, so that's not going to work in this situation without unbelievable damage. So just talked to my banker this morning, and been talking with our portfolio companies the last couple of weeks. The CEOs are on top of it and making adjustments to their burn rate, their strategies accordingly. Nobody's over leveraged or significantly overvalued to where they're having to do any major triage right now. We have had a couple deals reprice, but still get done. There's a lot of investor liquidity out there. Fortunately, many of our members sold out of the markets at the end of the year, going into the election year, the trade war, obviously oil having a huge impact now in the energy sector. So fortunately, many of our entrepreneurial investors, this is the time that they wait for. They are contrarian investors, and they've got capital and they're ready to go. So if, in fact, companies have technologies that can address the current situation, that our life science companies are able to repurpose what they do in some capacity to provide support, we're looking to bring those types of companies to the front of the line and get those companies funded so they can have impact and they can address the situation. And where can we put our investment dollars in addition to our time and our energy to be able to make an impact? We're always looking for that. So it's a powerful time right now. The leaders are stepping up. And entrepreneurship is never an easy game at any stretch, and it just got real for a lot of people. So we're looking forward to putting our mettle to the test here and seeing how much stronger we can come out of it.
That's great. And you touched on lowering the burn rates, ensuring that companies, if they're not in a fundraising mode, would have enough capital to last a potential economic movement like this towards the downtrend. For companies that are either low on their runway or they're in the middle of raising, do you foresee needing to lower the valuation of the company? Maybe it was overvalued because of the market looked like really promising near the end of 2019. And do you have any tips for startups that are raising capital on their valuation in these kinds of times?
Yeah, I've restructured probably 6 deals in a couple of weeks and got done with another one too. So it's a challenging time, and the companies need to talk with their existing investors, their advisors, and be able to they've got a good deal that's attractive. Hopefully finish up that fundraising effort as quick as they can, and then hunker down and see where things go. It's not a great time to try and raise a lot of money. So what we've seen companies do is to shorten up their fundraising cycle. In some cases, just finish off what they were doing because they've got money in the bank. It's not a great time to start a new fundraising cycle today, but there are companies that, hey, that's where they're at. So, looking at a 20 to 30% discount off of what they thought they would be at, going back to the last priced round and working off of that as a benchmark. But raising lots of capital today is tough. So we got to do more with less. We got to focus on customers, focus on trying to get to cash flow neutral, and then see where things are in a few months and, go back to the market at that point with a larger investment offering. So certainly things have been curtailed a bit, but the value of investment groups for companies that do need to raise capital or have a product that can in fact scale and be an impact in today's market, those are the things that we're looking to bring to the forefront, and our investors are excited to fund.
And from the previous research that I looked at, throughout the last crisis in 2008, 2009, a lot of unicorn companies were started during that time of crisis, like Uber, Airbnb, Spotify. A lot of these companies that are now multi-billion-dollar companies started their fundraising in a crisis. I see that as an encouragement for people that are starting companies to take a step forward rather than take a step back and put their head down and use this isolation time as a time to grind out what will become the future of their company when this economic shift ends. Do you foresee that?
Of course, focus on the core. That is what it all comes down to for many of these companies. Find a real need, create a real solution. And as the great Keith Grinstein used to say back in the dot-com time after the dot bomb, he said, swim between the waves. And that's what entrepreneurs do. You never know when that next wave in the market's going to come. But we certainly know the folks that are not for real are not going to be in the market much longer. So the companies that come out are going to be strong, and they're going to have the wind at their back on the other side of this. That's what the hope that keeps us going here during the tough times. And everyone's really pulled together. So much more interconnectivity amongst our communities that's gone online. So I think unlike past situations that we've gone through with financial corrections, people are able to access resources. I'm on, 5 different listserv groups and WhatsApp groups that are constantly posting positive updates, positive information. I mean, looked on LinkedIn, lots of great articles and content and research. So I think it's a very encouraging time to be an entrepreneur and really, sharpen up what you're doing, how you're doing it, focus and execute. And if you've got a great idea, great opportunity, it'll be rewarded down the road. And so we'll see what happens and see what the next round of unicorns are minted during this time, or how it ends up working out and how long it lasts. But definitely investing, right at the bottom. We'll see if this ends up being a very long economic issue or it ends up being a quick rebound. It'll be interesting to see. But we've had a nice run here the last 10 years, and obviously taking a major hiccup now. But we do feel very strong about our 100 plus portfolio companies with Keiretsu Capital the last few years. They're well positioned to continue to grow despite this, and hopefully have very strong exits, which may take a little longer now than they otherwise would have, but hopefully this is a short-term pain for long-term prosperity.
Well said. And are you seeing a lot of private companies still applying to Keiretsu Forum right now? And how can other potential startups and private companies learn more about Keiretsu Forum?
Yeah, we're fortunate. We originate most of our deal flow internally from within our group, from our successful entrepreneurs. So we'd encourage folks, if you're interested in investing and you've been an entrepreneur and you want to recycle that time and capital, it's a great time to join an angel group like Keiretsu or another local organization. Help these entrepreneurs mentor, give back, help out with due diligence and screening. For entrepreneurs, there's never a shortage of deal flow. Certainly was in the last couple of months, and entrepreneurs are having to reevaluate. There will be a bit of a hiccup in the market while everything kind of reprices itself, and the entrepreneurs regain their confidence in their ability to raise capital. The investors regain their confidence in their wanting to be willing investors, and that's what we saw during the last crash. Is all the investors became unwilling buyers and the entrepreneurs became unwilling sellers. So that became a tough market across the board. The entrepreneurs are certainly still willing to raise money and making adjustments, and the angels still have a lot of liquidity. So we do think things will continue, although at a little slower pace, and it'll be a little tougher to get to the full amount as fast as it was before. But it's a great time. It's never easy to raise money. It's certainly not a great time to start now. So, but if in fact you do have an opportunity that impacts the situation folks are dealing with, we've got one company that has a headset technology that is super high fidelity, originally going after high-end gamer teams. And now they've additionally pivoted to be more of an executive type product for all of us who are stuck at home having to do Zoom meetings all the time and looking for a little bit of a higher quality, better sound quality headset, for instance. So, you look at each company opportunity and say, hey, how can we use the current situation to our advantage to be a demand driver? And I think investors are very interested in those potential opportunities. And also the companies that may well be on sale a little bit, be a little cheaper, need a little short-term bridge capital at a good deal. So it's not real onerous, but companies need a short-term bridge opportunity. Great time to be in the debt market selectively and doing those loans, getting great terms, getting your money back plus equity. So a lot of our investors that have been sitting on a lot of cash are looking for and very happy to help support entrepreneurs in those ways. So I think everyone's got to be a little more pragmatic. You can't raise as much money as you necessarily were able to before. So you got to focus on sales, got to focus on business development and the core parts of the business. But if you believe angels can be supportive of your company and help fund it and grow it, you just got to keep getting after it and try and keep building that cap table of smart money to support you.
Mm-hmm. Very well said, Nathan. Thank you so much. This is all the time they have for the interview, but I will leave the links to Keiretsu Forum in the description box below for the viewers, and let's follow up in the near future.
Sounds great. Love to share with you more about some of our portfolio companies and the exciting things they're doing, but appreciate the opportunity to be with us. Thanks, Ashton.